Hi, this is Sam and welcome to this week's market commentary. U.S. stocks rose late on Wednesday, sending the S&P 500 index to a record which climbed 1.2% to 1725 after dropping as much as 0.3% before the Fed decision. The Dow Jones Industrial Average rose 153 points to 15,683 record levels. The Federal Open Market Committee said after the two-day meeting that it wants to observe more evidence that economic progress will be sustained before adjusting the pace of the $85 billion in monthly purchases of Treasury and mortgage debt. While downside risks to the outlook have diminished, the tightening of financial conditions observed in recent months, if sustained, could slow the pace of improvement according to the central bank. The FOMC has been debating how to scale back its $85 billion in monthly purchases of Treasury and mortgage debt, aimed at stoking economic growth and reducing unemployment rate that was 7.3% in August. The Fed has held the mean interest rate near zero since December 2008 and pushed its balance sheet to a record $3.66 trillion through 3 rounds of bond buying or quantitative easing. Dollar index sank 1.1% to its biggest slide in 2 months, while WTI oil jumped 2.5%, the most in 3 weeks, to $108 a barrel, extending earlier gains, which was triggered after the U.S. Energy Information Administration said stockpiles fell by 4.37 million barrels last week. The yield on 10-year U.S. government securities dropped 16 basis points to 2.69%. Spot gold surged 4.3% to $13.66 an ounce after earlier falling as much as 1.4%. The CBOE Volatility Index, the gauge of S&P 500 options prices known as the VIX, dropped 5.6% to 1372, the lowest level since August 16. The equity volatility gauge has tumbled 19% in September after rallying 26% in August, the biggest monthly gain since May 2012. European stocks rose to the highest level in more than 5 years as the Federal Reserve unexpectedly decided against slowing the pace of the monthly bond purchases. The Stoxx Europe 600 index rallied 0.6% to 315, the highest level since June 2008. The equity benchmark has gained 6% so far this month, extending its advances either to 13% as central banks around the world pledge to maintain stimulus measures to support the global economy. National benchmark indices gained in almost all of 18 Western European markets on Thursday. Germany's DAX rose 0.7%, the UK's FTSE 100 added 1%, and France's CAC 40 climbed 0.9%. The MSCI Emerging Markets Index added 0.7%, reversing earlier losses and reaching a 3-month high. The Hang Seng China Enterprises Index decreased 0.7%, while the Shanghai Composite Index added 0.3%. India's S&P Sensex jumped 0.8%, and Japan's Nikkei climbed up by 1.8%. Brazil and Indonesia have embarked on a series of rate increases to buoy the real and rupiah. The so-called BRICS countries, which also include China, Russia, and South Africa, pledged this month in St. Petersburg to create a $100 billion pool of currency reserves to guard against the shock of the withdrawal of the stimulus. The Fed's move spurred a rally in stocks and currencies from India to Indonesia, where officials in recent months have had to take steps including raising some interest rates to stem an outflow of capital. The reprieve still leaves India with the challenge of opening more industries to foreign investments, Indonesia with the domestic infrastructure weaknesses, and Malaysia with a persistent budget deficit. Singapore shares climbed 1.81% higher on Thursday after the U.S. Federal Reserve stunned markets by deciding not to taper its asset buying program. Singapore's benchmark STI index rose 57 points to 3251 levels. Trading volume was 5.55 billion shares worth 2.14 billion Singapore dollars. The continuation of economic stimulus in the near term is expected to be positively received by the market. After the FOMC's decision of last night, attention will switch to more data watch, such as the October debt ceiling debate and the upcoming third quarter results season. Thus, STI in the near term can be expected to be hovering around 30 to 50 levels. Currently, almost all these market indices are available under our CFD indices list, plus many more benchmarks based on different strategies are available via ETFs for you to trade both long and short with Phillip. This is all for today, and hope to see you soon with another round of market commentary. Thanks for watching.
Network.